Good to have you with us. We have, of course, iron ore is BHP's biggest earner, 65% of earnings. What assumptions are you making about demand? We know that in terms of demand, China has been pretty resilient.
Well, so thank you for having me. And yes, you're right to call out the resilience in China, where recovery is underway. Steel demand remains strong. And it's those dynamics that have really helped to underpin the revenue side of the equation of such a strong set of results for the past year. In spite of everything that the world faced and our industry faced, we've turned in a great set of results where we were safer, lower cost, and more productive for the year. And that's all underpinned not only the 17% return on capital employed, but the third year running of being able to return over $6 billion to shareholders.
So having said that, are you expecting a V-shaped recovery in terms of demand for iron ore from China? And what assumptions are you making for demand for the rest of the world?
So the recovery continues to be underway and appears strong in China. I think we're going to see quite a bit of volatility and uncertainty in the way the rest of the world recovers. And our broader economic forecast is for it to take about a year for the world to get back to pre-COVID levels of economic activity, and 2 or 3 years to get back onto the trajectory that we otherwise would have been on. But that's the broad economic outlook. In terms of iron ore itself, demand remains strong in China. Blast furnace utilization rates are quite high, and that appears to be holding up quite well. Of course, on the supply side, we'll see more supply coming to market from our competitors as they get past some of their challenges. But our strategy of being the lowest cost supplier, continuing to improve quality, and delivering continuous improvement reliably year in and year out, that holds. That's the winning strategy.
But Mike, with supply re-entering the market, can you still consider lifting export capacity from Australia and looking at higher volumes under that scenario? Is that realistic?
So we've been clear in our results announcement today that we see our iron ore business is an exceptionally good business. But the way that we'll continue to grow value and returns in that business is through focusing on operational excellence and really driving the returns on the capital that we have invested in that business rather than through major capital expansions. So it's all about productivity, safely, reliably delivering results year in and year out. We expect that that's going to see us reach 290 million tons per annum, which we've given as our medium-term guidance.
Do you expect iron ore prices to average $100 a ton next year?
I wouldn't want to give an exact prediction. I do think as more supply comes to market, we could see a bit of retracement in iron ore prices. But BHP is a diversified resources company, and we've got other commodities in the portfolio that as the rest of the world recovers, we do expect that that will result in perhaps more favorable market dynamics. So the resilience of the portfolio that we have, which has helped us see through the last 6 months of COVID, is going to stand us in good stead going forward as well. In spite of all the uncertainty out there, the resilience of our portfolio, the resilience of our people will allow us to continue to perform strongly.
Outside of iron ore, what impact have you seen from the virus on other materials?
So we've seen, obviously, in copper, prices have come up a bit off of their lows. That's on the back of strong demand and some supply-side challenges. The coal's been under a bit of pressure, but this is all in the short term. And if I bring us back to the long term, our fundamental thesis around long-term demand growth for the commodities that we produce remains unchanged in spite of COVID. And through this focus on operational excellence, financial discipline, and building options in these commodities that are most exposed to some of the longer-term trends underway around population growth, decarbonization, and so on, we're setting ourselves up to be able to deliver great value and returns for decades to come.
You know, you're looking to make an exit from coal, but BHP is not alone in this. How confident are you that you'll have enough buyers, that you'll get the right price, or is there investor appetite for a spin-off entity?
I want to be very clear here. This is an exit from 4 of our coal operations. We continue to see great value and upside in our higher quality hard coking coals, which will, as steelmakers move to reduce their carbon footprint and they lift blast furnace utilization as one means of doing that, there's going to be more demand and more upside for higher quality hard coking coal. So we remain committed to that core of our portfolio. We have other assets whose value will be realized through things like major capital investment and which are unlikely to compete well for capital within BHP, given our broader portfolio intent and the other options that we have available to us. Now, as to how we go about doing that, we're open to all options. And one of the reasons why we've come forward early on this is to give us the ability to get out there and explore different options, either trade sale or demerger, for example, being 2 of those options. We'll land the right solution in the next year or 2, and that solution will be the one that maximizes value for shareholders.
Mike, just to be clear, are you looking to make a full exit from coal in decades to come, or could coal be still part of your portfolio?
We think coal demand, both thermal coal and coking coal, that demand is going to be there for the foreseeable future and certainly decades to come. This is all about us tending to our own portfolio and ensuring that we've got greatest exposure to upside. And in this case, in coal, what that means is there's part of that coal portfolio that we think is going to generate greater value under a different ownership structure, and those are the assets that we've announced today. For the remainder of the business, we'll continue to focus on this strategy of operational excellence, getting the best returns out of the capital that we have deployed into that business, and we think that demand for that product and that upside that I've spoken about is going to be there for a long time yet.
Mike, you've also flagged plans to sell a share of some oil and gas assets in Australia. What's the longer-term plan for BHP in oil?
I've also been clear today that we see oil as being attractive, and that's on the basis of both ongoing demand for oil, given its underpinning to human mobility and many of the industrial processes that underpin better standards of living, coupled with, on the supply side, ongoing decline curves, which are a feature of the industry and conservatively 3% per annum. So there's going to be more oil supply that's needed. We think there's great value and returns to be generated in oil for the foreseeable future, so certainly the next decade, likely beyond that. So we'll continue to invest in oil and growing value and returns. However, we'll do so in a balanced way. Part of that balance is taking mature assets where there's less upside, which are less long life, like Bass Strait, and looking to divest them. So we've announced today that we'll move to divest our non-operated interest in the Bass Strait asset. Of course, that will help with a bit of capital recycling then, where we'll be able to take the proceeds from that divestment and continue to grow value and returns in the other part of our petroleum or oil and gas portfolio or elsewhere in the BHP portfolio.